right. Hey there. Good morning, everybody. Chris Franks with Texas West Capital coming at you guys live here just a few minutes after 11 a.m. Central Standard Time on Friday, the 10th of May, 2024. Hopefully you guys are doing all right there. And I'm going to go ahead and apologize ahead of time. I became ill yesterday. I'm still not so great today. So I think Fibbo will be doing a lot of the talking here. But I wanted to make sure, since it had been a little bit since Fibbo had been here, that we were able to get him on today rather than canceling. So hopefully y'all are doing all right amidst the recent pullback in Bitcoin. I know the title says Bitcoin bucking the FUD, and it really is still. This is just a pullback, and we'll talk about that. But, show title's done earlier in the week, guys. So every once in a while, something like this will happen. So don't take it too personally that it looks a little different at the moment as it did. Before we jump in here, guys, make sure that you hit the like button, that you subscribe, that you follow me wherever you're watching. Remember, we're simulcasting right now on YouTube, Twitch, Facebook, and X, Twitter. So wherever we can find you, we're trying to put our information out there for you guys. And, again, guys, remember, I've been doing this almost 30 years. This year will be 30 years. Fibbo's been doing it over 20 years. So between the both of us, over 50 years, over half a century of experience. So when we tell you things like relax, zoom out, when we talk about emotions and how they can be detrimental to your trading, stuff like that, make sure you guys are listening. Because if you don't listen and you don't figure that stuff out, you won't make it 5 years, 10 years, 30 years, whatever. So we're neither one of us are as old as Peter Brandt. So, we haven't been doing this for 187,000 years or whatever he's been doing it. But nonetheless, more than long enough to really kind of learn what it takes to be successful. But at the end of the day, we can tell you all day long what to do and how to do it, but you actually have to jump out there and do it. You've got to take the reins. You've got to be, I'm telling you guys this all the time, you got to be disciplined. You've got to be focused. You've got to be consistent, and you have to have patience. Learning to trade is no different than learning any other skill set. Okay. Except that you don't have to have any real physical prowess or any real brain prowess to do it, guys. I know some very, very, very successful traders, believe it or not, who did not graduate high school. So it's just, you got to be systematic, and you got to work on your emotions. You got to be aware they're there and work on them. So good to see you guys all here. So the title today was, Bitcoin bucking the FUD, right? And what I was talking about was that we've had all this SEC stuff and whatever, especially in the last couple of weeks coming out. We've had Robinhood, got a Wells notice. We got all this stuff going on. And Bitcoin, for more than the first half of this month so far, was rallying. It's only been pulling back the last few days. And so again, we'll talk about that as we do it. But let me go ahead and jump in and pull Fibbo up here. Look at this, guys. Get all excited. There's Fibbo. What's going on, buddy?
What's happening?
Same old.
Yeah. No, I hear you. No, everything's been going pretty well. Been busy for sure. Busy times at the moment, but not so much in the trading. I'm just talking about job wise. I've just been busy. But everything else going pretty well.
Yeah. So
yeah, you mentioned a couple of things. With trading, emotion. Really, it's all about managing your emotion. Once you start to get that down, you'll be surprised on how things will change. Once you figure that out, which it takes time. I mean, it's not. And one of the emotions that we talk about a lot, and Chris and I were even talking about it before, is patience. And right now, this is exactly the type of environment where patience is key.
Yeah.
And I also kind of give it I always talk about liminal space, that area of jumping that threshold. Basically, that was my whole reason of jumping into the markets and analyzing the way I do, is that, jumping over that threshold when you're at the edge of something and you're in this range of either breaking up to a new high or breaking down to a new low within a consolidation range, patience and emotions run the highest. It's like people are like, I got to do something. I got to get in, got to do this. And a lot of times you either get overexposed or there's different things that can happen when your emotions start to get the best of you. And I'm sure we'll talk about that a lot as we go through here, but that's one of the main things that I've been noticing the last few weeks is the DMs I get are probably defined as patience. I mean, that's what it kind of comes down to.
So do you think a lot of that right now has to do with the fact that people feel like they have to be in the market all the time, that they have to be in every day, that they have to be making, 1% every day or 5% every day? Do you think that contributes a lot to the impatience that they're feeling?
Yeah, if you're in that environment where you feel like you have to be doing something, that's when your emotions are going to get you the best, and most of the time you're going to make bad decisions. Um, when you're feeling like, oh, I need to do something, I need to do this, but like you said, we got 50 years among both of us, and Peter Brandt, I think, has 50 years on his own. So
Maybe 150,000 years. I don't know. He's keeps joking about how old he is.
yeah, exactly. But one of the things that started laughing. Now I've lost my train of thought what I was talking about. Where was I? I totally lost my brain there a second.
You talk about us having 50 years of experience.
Oh yeah. No, it was it's the experience of having the market come to you and you not jumping into the market. That's the key. That's why when I'm in this area of this liminal space that I call it, it's really I'm waiting for the market to come to my strategy and my analysis. I don't want to jump in just because it looks like it should go up, or you get a large candle going one direction, and you'll kind of see this in some of the charts. We had a nice rally to the upside, but nothing flipped bull. So it just kind of kept us in this consolidation. So if you've been playing that, then you're still waiting, and that's where the patience comes in, because you're still like, okay, I haven't done nothing in a month. I need to do something, and sometimes there's going to be, I can't remember what somebody called it. It was like I don't know, like a no underwear month or something like that. Like you can't, I can't remember some weird term. Like every month you usually buy certain things or whatever, and sometimes
this is why we bring Fibble on here, folks, so we can talk about no underwear month.
I can't remember what it was. I just, but it's along the lines of there's necessities that you have to buy on a monthly basis, but some months you just don't have it to buy or whatever, and it's the same kind of mindset of you're trading this month and nothing's signaling, and there's going to be months like that you're just going to have to like kind of eat them and go on to the next month. I mean, that's just the way things go. But the worst thing to do is to say, hey, I haven't done anything in 2 weeks or so. I'm just going to get in because I feel like since it's been doing this for a while, maybe it'll start popping up. And the next thing you know, you're losing, because it's still in that area. It's dropping back down to the lower part of the range, and you got in a little too early when you should be buying the bottom of the range. Just stuff like that. And it gets aggravating and frustrating. But yeah, and it's just that's why I think one of the things that technical, like when you define technical analysis, you're really measuring crowd psychology. I mean, that's really what you're doing. And if that crowd, and the thing is it's all of that fear and greed and that emotion, and most of the market really doesn't handle that really well, and that's what creates all these patterns of fear and greed. So to me, that's why you have to wait and let all of that emotion fall through and let the market dictate what's going to happen. And you not try to dictate what you think's going to happen. Cause that's what'll kind of eat you up. But that's unfortunately that's where we're at. And, we just got to be ready. And of course we're in bear zones on a lot of things, and I'll show you where I'm at and where I'm going to be doing what I'm doing based on the area that we're in, that kind of thing. So
sounds good. Well, let's go ahead and go on here. Let me pull up the chart here real quick.
Which one's this?
This is
hour.
The hourly. I'm sorry. It looks like I'm not pulling this up correctly on here. Yeah, it's always something. Let me see here. There we go. That's what I'm trying to do. It's a little bit smaller there. All right. So basically, guys, here's my the big thing I'm talking about here. Let me zoom out to the daily here real quick. So this is bearish market structure, guys. You've got a high, you've got a low, you've got a lower high, a lower low, a lower high, and potentially a lower low here. And you go, well, why is that potentially? Well, because this could drop down lower, and this wouldn't be the lower low. Your next lower low comes, or like as you're coming down here, right? So you make your low. This doesn't become a lower high until you break down and make a lower low, because until you do that, it could still break out higher. So, you come on down here, you made another lower low, you rallied up, maybe a lower high, boom, here's a lower low broken down below that, so it leaves a lower high here. And so now we're saying, okay, is this the lower low? Does it come down lower? Does it break out? So as Fibble was talking about here, guys, we're just range bound, right? We've been range bound. Basically, our range is from right over here around the 5th of March, okay? So that's 66 days. It's about 2 months of sideways, okay? Now, we had we still potentially have this, we had a higher high, higher low, higher high, and then we dipped down here and we broke below that higher low here, and we rallied back up. But in order to say that this bullish market structure is no longer, we have to now break down and lock it in. So here's what we're looking at, guys. If we break out above this last lower high up here, so this is right around the 22nd of April. This is the Bitcoin all-time index chart. So I use this now, guys, instead of the BLX, because the BLX only gives you daily and higher time frames, and you have to wait till after the end of the day before it, adjusts. This adjusts constantly throughout the day, every day, and it goes all the way back to the beginning as well. So a better chart, I think, to follow it. But on this chart here, this last lower high here, so on your chart should be somewhere around 67,467 or so. That's the March 13th on my time zone here, Central Standard Time. It's that swing high. If we break out above that, then we have, this becomes a lower low, and then we have a higher high. Here's your last high, and then we get a higher high, okay? So that's all we're looking for right now. At the end of the day, this is where we're at. Now, locally here, and again, Phil will show you what he's talking about in just 1 minute here, but what we're doing right here, we had this drop, right? So what I was looking at when I was talking about rallying this month was from the low here. Now, this is 3 o'clock in the morning on the 1st of May, okay? This right here. And so the 1st of May actually started, where was it? Right in this area right here. So we've almost kind of pulled back to it, but as you can see here, for 6 days out of the month, at the beginning of this month so far, we rallied. We're only pulling back 3 days going into our 4th day here, okay? Here's the thing. You can get one out of this, and this potentially becomes A, B, C here. So if you're looking, look, we've only pulled back just beyond the 50%. We might have just printed a bullish SFP right here, which is just this wick down below previous support. We're looking pretty good on the 1 hour right here. So my thought is, if we're breaking out above this swing high right here, that to me will signal this is a 1, this is a 2. So then locally, we have wave 3 in progress, which will get us, let me see here, up here around minimum expected 76,555.5 on this chart. That's minimum expected. If we've got, still 10 billion worth of shorts in this area, we should get a hell of a squeeze up. Secondary target is 80,981. Third target is 88,689. So those would be the 3 levels I'd be looking at. But even hitting the first one, obviously, it'll take you above this last lower high, break that bearish market structure. And, again, I'm still looking at this as a spring right here. If we look at the volume and price action through here, this does appear to be accumulation, this range right here, and accumulating for, 2 months so far. The longer the contraction, the bigger the expansion, guys. So you should expect a stronger, bigger breakout when it happens. But, you're patient, right? So if you're going to trade this local area, you want to break out above. On this chart, it is that what is that there? 63,492 area. But whatever your chart is, this morning swing high here, that's what you're looking for. You get a breakout above that, you can play this potentially as a wave 3 toward that 76,555 kind of area minimum. If we're breaking above the last lower high here, that's going to add a lot of confidence to the idea that this is a spring. This is your pullback, last point of support here, and rallying up. And by the way, guys, with this range here, you should expect big candles, large spike of volume as we're breaking out above this area right here. This is the is supply. We call that the creek in Wyckoff. And basically, it's just that breakthrough it. So you're going to, expecting big candle spreads, big spike of volume as it goes through it, like on the daily, maybe even the 4-hour as you do that. So this is all what we're looking for. Nothing here is bearish to me yet. And especially not if we're breaking out above this last swing, this last lower high here. So let me throw up Fibbo here. Let's see what he's got. He can talk to us about a little bit.
Yeah, you bet. I'm going to start out with the hourly, kind of what you're looking at. Our levels are pretty close on some of these, but the bear zone here hit the other day. It doesn't look like it visually, but when you look at it, it was at 38.83, and the zone is 39.05. So when that clicked down right here, it ended up going into the bear zone. And it already had three consecutive settles underneath the previous shallow fib here. So if you were trading this, if you wanted to short, the short side was there with the target being this 100% level at 59.2, given the 100% level for one. And then also, if you take this trend line break that it broke and then it came back up and retested right here and made those lower highs, that measurement also brings us up down to around that 59.2. So for me on the hourly, you kind of wait, and that's where that patience kind of comes in, and you're waiting for that movement to the downside. We actually came down a little bit lower, so I can actually move my fibs down a little bit here on the latest candle. So that puts the shallow fib now at 61.5, going the other direction. But the level that I was kind of looking at when Chris was talking about, breaking to the upside, for me at the moment, the bull zone is at 64,223. Now that changes as the market moves because it's based on math. But the 64.2 at the moment is where the market would have to get to flip to the bull zone for me on the hourly. But that doesn't mean that it can't get up to, breaking into some of the levels that Chris is saying before, because maybe his signal is a little bit earlier than mine, or that kind of thing. But for me, it has to break that price level to flip us into that bull zone. And so for now, it's really just kind of this wait and hold as we're inching our way back down to the downside. But again, still within the same range that we've been in for a while.
What did you? Real quick here. What did you say that target was lower? I forgot to mention mine. I think it's probably pretty close to mine.
The 100% level for my threshold is 59,269 is the level.
Okay. Yeah. I'm looking if we were to continue breaking down further. There's a confluence area there with the hourly S1 pivot and the bottom of the range and like the 70.5 retracement, all kind of around that 59,000 level. So yeah, I like your target there, man. That kind of aligns with more or less with what we're looking there within a few $100s. So yeah, I like that.
And that's the first spot that I would look to possibly get long while we're in the bear zone. But then again, it's also a level that if it ends up getting underneath there and we get 3 hourly closes underneath that after I buy, then I'll be immediately out and wait for at least the next target down here on the fib extension. If it wants to continue, this level right in here toward the lower part of the range between the 127 141, which is basically between 56.6 and 57.5. But this level right in here is right around that 56.9, and that would be the area that I would look at if we got stopped out on the downside and we wanted to continue a larger correction. And then if that happens and we get bought there and it wants to continue even further, 3 settles under the 56.6, and then I'm waiting for 53.
Yeah.
So that's what I'm kind of looking at here. But the first level is this key. This is going to be a key support here. This is going to be a good level to
Mhm.
let us know if this thing's going to hold and then take off the other way. But that's all that's happening on the hourly, not too much else. But one of the keys that you'll see is the hourly, the 4 hour, the daily. They're all in the bear zone. So one of the things that Chris and I were talking about before we got on here is about exposure.
Yeah.
Whenever I'm in a 4 hour daily and hourly all in the bear zone, and the weekly is in the bull zone, because that long term trend is still there for the bulls. You want to watch your exposure levels, because when you go to get into the hourly or the 4 hour, you do have the risk of being chopped up while it's in consolidation, given that it's a trend based system.
Yeah.
So, so that's why it's all about exposure. So next time you get a bull zone on the 4 hour, you're not going in all gangbusters and going, yeah, let's go. And the next thing you know, you're chopped up, and then you're all pissed off
Yeah.
and that kind of thing. So that's one of the things that is really key, is really kind of looking at all the time frames and kind of getting a feel for where we are in the near term, middle term, long term, so you can get a feel for where you need to put the exposure, and those kind of things. So
Mhm.
let's flip over to the 4 hour here. Again, bear zone, went into the bear zone, still in consolidation. I can actually move this down just a little bit. This is one of the things where we were just talking about. We went into the bear zone here, and it started to rally, and it got all the way up to almost 64, but never really broke back into a bull zone. Didn't get a lot of momentum behind it, so you wouldn't be buying just yet on a new way to the upside. So the 4 hour is also in this bear zone, and I'm also in a hold and wait pattern, where the 100% on the 4 hour here is at 58,990. So I mean, basically rounded is at
Same area.
59, which is right around that same level that we're looking at on the hourly,
Yeah.
as that level to kind of hold and wait to get long while in the bear zone. Otherwise, I wait for a new bull zone. So one or the other will hit, and I'm just kind of waiting it out. And unfortunately, it gets frustrating, and you got to have patience.
Yeah.
And right now, I'm just kind of waiting. But
Mhm.
the same kind of thing is on the hourly is, if this ends up breaking, then you got that previous low that fits into the fib extension levels at 56.5. And then if that breaks down, then you're looking at 52.4, which is relatively close to the 53 on the hourly. So the hour and the 4 hour are looking pretty similar. And in this case, on the 4 hour, we need to see 65.4 to even get back into the bull zone. So
Yeah.
this could actually rally all the way up, getting close to the previous high, and still not be signaling a bull zone for me.
On the
Um,
4 hour, right?
on the 4 hour,
The
yeah.
4 hour.
The hourly might click in earlier,
Yeah.
and then it might take a little bit longer to get the 4 hour, and then of course a lot longer for the daily, just for the time periods. But that's kind of the progression that I'm waiting to see. And we've had some hourlies, and we had some 4 hours go into the bull zone, and unfortunately it kind of kicked us out, and we got stopped and took a little bit of a loss. And that'll happen while we're chopping.
Yeah.
But any trend following system is set up to be
Yeah.
small losses. So when that trend starts to kick in, you will make back those losses rather quickly on the larger gains. And it's just a hold and wait kind of time
But
period.
that's the key. You've got to have your position size to make sure that if you do take a loss, you aren't taking a huge loss, right?
Yeah, exactly. It comes back to the exposure that I was talking
Yeah.
about. Having a lot of bear zones and a lot of time frames, but except the weekly. The only time I actually consider going short is when the weekly is in the bear zone and we're actually in a primary bear market, and we're nowhere near that. But we are in a setup where a consolidate or a correction could take us a little further. Like you were showing on the daily, we're in this range, but again, you can't mark the lower high or the until it actually makes a lower low. What I mean, what you
Yeah.
were talking about in that zone, and that's kind of where we're at,
Yeah.
waiting on that. Now, if we go over to the daily, um, this has been bear zone for a little while. And I got a couple of targets on here that I'm looking at to kind of buy while in the bear zone. Uh, the trend line break objective brings us down to about 51.7. But before that, the threshold levels that I have for my fibs is at the 61.8% comes in around 54.7. So if this market wants to correct much further to the downside,
Yeah.
I have limit orders waiting at both of those levels if this thing wants to wick down and get filled and maybe find some buying interest to get us back up to the upside. Because this
Okay.
level here, and you'll see on the weekly and some of the other stuff, this 49.1 area, which was this previous high, is going to be a pretty key level to watch, especially on the weekly if it ends up correcting all the way back down to that level. Most likely it probably won't, but again, it is a market, and anything can happen, so you got to be prepared.
Yeah.
But
We
that,
got to
that
trade. We got to trade what's coming at us, not what we think
yeah,
yeah, that
yep,
it needs to do. Right.
yep,
Yeah.
exactly. Now the um, unfortunately, this is a much larger time frame on the daily, and I'm actually still long, um, some from way back when at 59.3, and I actually have a break even stop on it in case this thing just goes nuts, and I just don't want to lose any on it. But I had profit from other ones, but that was the last remaining long that I had from a long time ago that never hit any of the upside targets. I just been kind of holding it to keep some exposure because that's the
Yeah.
only exposure I have in Bitcoin right now is my BTC on my daily.
Hmm.
My hourly and my 4 hour are flat, and I'm just been waiting for entry points on those.
Gotcha.
But given these levels, uh, that first target at 54.7 is where I'm going to be looking at first and going from there. So given that we're looking at all three of those time frames in the bear zone, let's look at the weekly here. Because a lot of people, this latest correction to the downside, everybody was acting like the sky was falling, and it really wasn't. And I
Yeah.
put this out on Twitter a while back, or on X. Sorry, I'm not up to the times. But the but all the I just put in all the corrections on this move to the on this whole motive wave to the upside here. Every correction, this one was at 22%, basically 20%, 21, rounded up is 22, and then this latest one was at 23. So all of these corrections are working nicely on this move to the upside. Um, a couple of levels that I liked to see so far is when we did correct back, we did bounce rather nicely off the bottom of my fib extension zone, because these fibs are based off the different zone levels, and we were in this 56.3 to 60.8 extension here. And then once we broke above there, this level will become support now, and it hit that support rather nicely at the bottom of that range and has jumped up. Now we're back here touching back into the zone. So the risk is to this downside to the shallow fib, which is at 53.4, which when you look back at some of these other levels, if this wants to break down pretty strongly on the daily and it gets into this zone down here between 51.7 and 54.7, that weekly can come all the way back down to that level and fill us in this zone here, and still be long-term bullish. Because when
Yeah.
you look at the weekly here, the bear zone doesn't click until it gets underneath 47K. So to me, I can ride this all the way down to 53, gather up my longs in the different time periods, and then hopefully it would gather up some buying interest and take us to the upside. But then again, if this ends up breaking down, then that's when the low 40s would come into play. But you have to get the weekly all the way down to the 53, and then you got to have 3 weekly settlements underneath that. Well, actually, you can go all the way down to 47 before it would
Okay.
even break the bear zone. So you could actually get down probably close to this trend line if it wants to keep going this direction on this trend line to keep us on this nice bull run to the upside. So right now, with this breaking down to the 23%, like it did mostly on all these, the only one that it didn't was this early one here. But I was just measuring it from the break and then the retest of the trend line. So to me, this is the start of what I look at, and all of those are in the 20s on the correction. So I mean,
Yeah.
can it correct further? Of course, but given that it went 23% down already, then I can see where a lot of support and buying interest could come back into the market as this price goes back down into that range. So
Yeah.
that's what I'm kind of watching on that. Is that 53.4 as an area to kind of look at on the weekly to get long on that. And then one other chart that I was looking at, um, I, I've been working on a lot of macro stuff, and I'll have some stuff here in the next couple of weeks, probably into the next month, because I'm trying to figure out the macro picture of what I look at and trying to get a good feel for the future, just to get as a guideline, not as a back up the truck
Yeah.
and mortgage your house kind of stuff.
Yeah.
I'm just more of a guideline. But one thing I was looking here, and I don't know how much is going to really take into consideration, but we had from high to high, we had about 186 bars here, 180 to get, from high to high. So
Yeah.
kind of getting that range as we kind of wrap ourselves around each one of these halvings. And then on the downside here, we had the low to low to low, and they were at 179 and 179. So I got another 179 out here kind of looking. But what I was looking at here was the break of these trend lines. Um, once this broke and retested this trend line, it's about the same level that we were priced at when the halving happened, and then we started to rally. And then we had the same one here. It broke the trend. It broke here, and then the break point of the trend line was about where it started on the halving, and then we rallied on from there. But this is the interesting thing this time is because the last couple of times we never broke a new high prior to having, and this time we did. So the thing I'm kind of looking at here is, this is where it kind of broke out, and it was right around 49.6 as the level of where the halving would have started if it would have kept the same patterns as the other times. But this time, maybe it's correcting back to that point before it starts taking off. So maybe we're going to get down to those low 50s before it starts to head higher. But then again, if we get all the way down to the low 50s, we're still primary bullish. It's just a little bit
Yeah.
of a further correction. So to me, if I'm dollar cost averaging in the bear zone as we get down to the lowest one I have now is on the daily at what was it, 51 or so. Yeah, 51.7. So if I get down here and buy these levels in dollar cost average in here, and it comes all the way down to this just above this 49.1, that's why I really was saying this level is pretty key on this 49.1, because if it comes down to this 49.6 and it corrects back to that level, it's going to maintain that really key level of critical support and then launches from there. Not to say that's going to happen, because we are in a different environment than the last two, because we
Yeah.
never saw that high prior to the halving. But this time we did, and maybe it wants to correct back to that level,
Yeah.
accumulate more there, and then take off north, afterwards. Or it could just start to get out of consolidation now and just start taking off, which I'd be happy with, to get us out of this rut that we're in at the moment, going back and forth. But I was just looking at that. I got a bunch of other stuff, but I'll have it finalized and in a better story soon.
Okay.
I just been kind of working on it just because I always look at the macro. Okay, well, we hit this point, we hit this low, we hit this high. Now what? Everyone's asking me, what's the macro picture? What's happening in the future? So I'm still working on that. But this is just one of them that I was kind of playing around with and noticed that. And if this is the case, then if this kind of holds out and heads up to the upside, I don't have my other chart with me, but the wave pattern to the upside gives us shoot, I can't remember what the number was. I think if this holds support here and it goes on a nice run to the upside, I think I'm at 108K as the level to get on that final wave to the upside. So that'd be something interesting to see on yours, Chris. I haven't seen it in a while on your wave levels to the upside. Mine is around, I think it's 106, 108, somewhere around there if I go off memory, but it's just above 100K, and that comes from some of my Fibonacci extensions. I just don't have the chart, and I can't remember what the name of it was, so it would take me a while to find it. But that's where I'm at on that. So when it comes to BTC, first three time periods I look at are all bearish. We're still bullish long term, holding pattern. So that's where I'm at on that.
So patience is
patience. Key. So anything to add on that?
Just just a quick kind of target idea. Not even worrying about waves and whatever. I've talked about it so many times before, but the aggressive nature of price action through the pivots on the weekly. So it came in sideways between the pivot and the R1 pivot, and then shot up like to the R3 pivot.
Okay.
Again, 9 times out of 10, whatever it is, it's significant like that. Usually what we're going to see is we're going to see price rallying through the R5 pivot. So that would give us 117,000 and some change without worrying about, if you don't like Elliott wave, you don't have to worry about that. Whatever. We're talking about price action and the way it usually functions with the way that it's entered into the particular not fibs, but pivots this time. So minimally that, but I mean, I'm looking up potentially even 176 or 240 something thousand, I believe, depending on how we go. So the big thing is that we have that huge bunch of shorts. So like something like $10 billion in shorts around 73,000. So if we are to hit that,
that could get nasty.
I think we get an overextension locally, potentially into the mid 80s, maybe even, upper 80s, just on the local rally, like a local wave 3 of 3 kind of thing. And so depending on what happens there, that can change that upper target and how everything else is going on. But I think that's something we really have to watch. If price gets back up there toward that all-time high again, we should expect some acceleration into that all-time high. And then that would start setting off the shorts. And for those that don't understand short squeezes, what it means is it's going to hit that pocket of shorts there. And so you have a lot of force hitting that. And so that starts people who are short all of a sudden end up negative, right? So they have to cover their shorts. And so what that means, they have to get out of their shorts. In order to get out of their shorts, a long has to take the place, right? It's not, oh, somebody's just selling. If somebody's selling, somebody has to buy. So if the shorts are out there getting out of their shorts, somebody's buying it. So that's more fuel on top of the push that's already into it. And then those that are short with all that force coming up through it often join long, giving even more extension, guys. And that's why you get that's why you get a short squeeze. You have a big push into it. Shorts are immediately off sides. They've got to get out. So that puts more fuel in the fire as more longs are entered in, pushing it up even higher. And then they also go long themselves, adding even more fuel to it. And that's why you get those big, huge pumps out of those short squeezes. And, the more significant the more significant the number of shorts in that area are, the bigger and stronger you should expect the pop generally to be. So just only other thing I'm thinking about in terms of Bitcoin right now.
Yep. And I'm just looking at the weekly here, and I know this is a little bit longer term, but one of the things is, when you look at the RSI here, making a low and then a lower low here, and then it was kind of flat right here. A little bit of a divergence led to this nice run to the upside. We're kind of seeing the same thing here. Low, it's making a lower low on the RSI, but it's definitely not making a lower on price.
Yeah, higher
low.
I
mean, it's very long term. Weeklies take a long time to get it, established. But just looking at that as just eyeballing it, we're getting back down into the lower part of this bull zone while it's hitting support on a divergence. ADX is still elevated. The green positive directional index is nowhere near crossing. Even the red negative directional index, even though the price is coming down, is not increasing on a week over week basis.
Yeah.
So all of that together is saying that support you should find buying interest at support. And right now we're right at support at the top of this range. We've already tested the bottom, but it doesn't mean that it can't, flush
Yeah.
us out and get us all the way back down to this shallow fib at 53.4 before heading higher. But I like the way this is setting up is maintaining that long-term structure, and that's what I want to. That's the main thing I want to see. So that's why I'm not too worried about getting into a 4-hour trade with minimal exposure, um, to where to get some exposure when it hits a bull zone in the 4 hour.
Yeah.
Um, but again, if it stays in consolidation, we could get chopped up again. But that's trading. I mean, if you
Yeah.
it, you're going to have periods of any system. I don't care what system you have. There's always going to be a period of times where it's not going to work perfectly, and you just have to. It comes all the way back down to emotion and patience, and and time and all those kind of things. But that's
For
where I'm
sure.
at on BTC. I can go on to some others real quick if that's
Yeah. Yeah. Go ahead and run through your other ones, man. I think
yeah.
everybody here wants to hear them.
Yeah, this is all what I've been looking at. Ethereum's been boring. I've been again patience. I'm in the bear zone. Been waiting for this downside target. Didn't quite hit it this past. It did hit the zone, but when you go back into history, this was a better level to buy. So I kind of missed that. So I missed this upside trade. But again, it was the same kind of thing. We rallied up, and it looks like we're getting back bullish again. But it never went into the bull zone. So for me, I was just waiting for the bottom of this zone to get long while in the bear zone. So this kind of works along the same with Bitcoin. Also, is if it wants to continue to correct back just a little bit further, you're going to get into the support points that you can get back long again while it's in the bear zone, and then maybe it starts to take off, or you get stopped back out. And if it does, then you go down to the next target, which would in this case would be the 200% all the way down to about 25.35. But the current target that I'm looking at the moment is still right around 27.84, and that's at the bottom of this fib extension zone. I just been waiting for it to get there, and just been kind of waiting. And then on the daily, same kind of thing. Been in the bear zone. I got a target down here at the 100% at 24.10, and it's been in the bear zone for a while. Again, it rallied up, never went into the bull zone based on the historical movements of those zones, and we're still, on the downside. So a lot of this will be, a lot of these you're going to start looking at your upper trend lines here like this, and it's going to take that break to the upside there. Actually, let me look up the number here. The bull zone right now is at 34.15. So a move up to the trend line today is right around 33.76. So again, a trend line would have to have three settles above it. But again, if this gets up and it gets above this trend line, and it clicks into the bull zone, then most likely you're gonna buy the bull zone, maybe even buy again on a retracement back to the trend line. It all depends on how it works out, um, but you're on this downtrend, maybe almost like a channel type pattern, um, that we're seeing in a lot of markets at the moment. So you're kind of in
Yeah.
this kind of environment. So um, again, patience and waiting. Moving on to the other markets I look at, S&P 500 on the 4 hour, rather nice. We got into the bull zone, went up, actually missed it right here on the target, but then we came back down and went back up. We actually sold out on a nice trade. Um, I've been waiting for another movement back to the shallow fib on the 4 hour. If you wanted to continue the trend, and I just been busy, so I didn't do it. I guess I could get back in right now if I wanted to, but there was 3 consecutive settles above this target. So if you wanted to get back in long and have exposure to the next target, you could. I bypassed that, so I'm just kind of waiting for a nice correction back to the shallow fib, which is right just above 5,200. So if it
Yeah.
wants to get back down into that range, the bear zone's at 51.75. So for me, I'll just be patient and wait out that to see if it gets down to that level. I'll buy the shallow fib there, and maybe it'll rally back up. If I do end up buying it down there at 52 and change, 53.33 is the fib extension target within the zone, based on the next levels of hitting this target already. But nice movement, nice profit on the S&P. So there are markets that are out there that we're actually making money on trend, and some of them we aren't. And BTC is one of them that we just gotta kind of wait out a little bit. So when you're looking at the daily, the daily is interesting because it went into the bear zone here, but it never broke down the previous shallow fib, and it never had 3 settles below it. So any longs that you had during this structure, you probably got out and took profit because this target hit right here, and then it went bear. So you might not have had anything, but if you did, you probably got out pretty quickly, or you just held it and bought the previous shallow fib while in the bear zone, and you might have added to your position. There's different ways to play it. I haven't been playing the daily. I've been playing the 4 hour. I've been waiting for a new bull zone on the daily, to be honest, and nothing's happened yet. We've even rallied all the way back up, almost making another high here, but it's hasn't broken into the bull zone yet. The bull zone there is at 52.74, so it's getting close. So if it ends up breaking into the bull zone, it will be a buy immediately because it's already has 3 settles above the shallow fib, which is at 50.82, which would become the previous shallow fib because there'll be a new bull zone. The green positive directional index is starting to cross up through the red. So all it has to take is a little bit more buying interest, click us into that bull zone, and I'll get back long on the daily. And then our next target up there would be 54.21. So that's what I'm kind of looking at on that. Gold's another one that we just made some profit on. We just bought the bull zone here. We were already above the previous shallow fib here on this third candle. So we bought the target hit at 23.75. So we made the profit right here. Now I just bought back in right before the call, to be honest, where the shallow fib hit at 23.64.30. It actually traded just a little bit below that. So I'm back long again on gold. So I went long, made the profit, hit the shallow fib, bought it. Now the next target to the upside actually comes in at the top of the range. So I'm looking at 24.12, right around the upper part of that range is the next area to sell off the long that I have here. So everything looking decent on 4 hour gold. So again, another market that's trending, so we could actually make some money while we wait on this other stuff that wants to chop us around. So that's why, I guess it's diversification, I guess you could say, is looking at different assets. But these are all the same ones I generally trade. So that's what I'm kind of looking at there.
Yeah, it's not like you're trading every metal out there, every stock out there, whatever. You're like, here's my few things that I trade. And guys, listen, this I think is really important. I'm glad you said that, Fibbo. Something I talk about often because people, when they come into crypto, they're new, they don't understand markets, they're new to trading, and they just want to jump in anything that moves. And the reality of it is, guys, the professionals out there, they spend a career, decades, one stock, one sector, one something, right? They don't sit there and trade everything that moves. So you see Fibbo's talking about, Bitcoin, Ethereum, the E-minis for S&P or whatever, the dollar, gold. I mean, it's a few markets, right? That's all. There's a few different assets. He doesn't trade every single thing out there because you don't have to. And the more that you're trying to trade out there instead of just focusing, the more likely that you're going to get caught up and you're going to miss trades, you're going to take bad trades, and you're not going to get your system going and predictable and moving with what you're doing. So I'm glad you brought that up, man.
Yep. No, that's good. On the daily, this was an interesting thing that happened. And this comes back to there's threshold theory, and then there's also risk management. You know what I mean? So there's two different things. And in this one, what happened was we had a nice bull run, sold the target. So we made good money on the move to the upside here in gold. It came back down and hit the shallow fib here, and I bought right here. But buying the shallow fib, my next target wasn't until way up there. But what was happening was I got chopped out on BTC on a little bit of a 4 hour trade and got a little bit of a loss. But this was trading, up a little bit. I went ahead and took the profit off of what I had here, even though it was against my system. It was more of a risk management play of, I lost a little bit on that chop, but I'm making decent money on this daily on the gold, because it's this one's on leverage. All my BTC trades are usually spot, but this is my leverage trade, so that helped offset and actually made me a little bit of money on top of it by getting out of this. So,
Yeah.
like I said, there's threshold theory as in playing the market, but then there's also risk management of, hey, I have profit here. I'm already playing the 4 hour and making good money on that. Let's take this so I don't lose anything and keep myself somewhat even to a slightly positive month because
Yeah.
of the chop that we've been seeing and not a lot going on. So just because there's threshold theory or any strategy that you run, there's always going to be that money management on the other side to say, hey, this makes it doesn't hurt to take profit and keep your books at a nice level, that kind of thing. So,
Yeah.
but if you were not in that situation and you were just playing it as you should, you would be buying it in here with a nice move to the upside with the next target all the way up at 26.45.
Nice target.
And totally could happen. It's setting up very nicely to do that.
Yeah.
Came down here and dipped down into the bull zone while it was hitting the shallow fib, keeping us elevated into that bull zone. Made sense to buy it there. And if it wants to stair step, if we want to stair step up, consolidate, stair step up, break down. Is this the fifth wave? I don't know. I don't have the LA wave on this, but just looking at just this move right here, you got a little bit more of a sideways consolidation versus a zigzag to the downside. So you do have that alternate, and maybe you have a count on it. I don't have a count on this, but if you do buy here, it could lead us into a nice move to the upside, and maybe it goes all the way back here to your movements. I haven't counted it out, but if you're playing it, you bought the shallow fib and you're long and you're in the money, waiting for a nice move to the upside. Momentum is getting back kind of flat and moving to the upside here for the bulls. So I could see buying interest kind of creeping back into this market.
And that is a wedge there as well for anybody that may be paying attention on that pullback. That is a wedge coming in. So if you're looking for more reason to potentially want to be long, the breakout of that wedge locally there.
Are you talking about this?
Well, from the second high right there, not the first one where you grabbed, next one over, and then bring it down.
Yep, right here.
Yeah, something like that. Yeah. And then you got off the lows right there between it.
Yeah, right here.
Well, actually, I went off the red one to the red one.
Yeah, this one here.
Well, I go the other one after I do the top, bottom, the alternating.
Oh, I got you.
Yeah.
Yeah.
But yeah, either way, I mean, like you can see, there's a consolidation into that expansion, that breakout expansion afterwards. So for those that are looking, they might see that as well on there. And so you kind of got that with your shallow fib buy there, being a good kind of confluence of factors.
Yep. And then breaking into the bull zone right here, the trend line.
Following that's nice.
Yeah, this is the one I'd be following as my support guy going forward. So if you really wanted to, another thing that I kind of do on the side for money management is if you buy into a shallow fib and you're having a month where things are tight versus you rally up and get a 25%er or those kind of things. There's good. Those are the buy the underwear month. I just kidding. But but what happens is like this could be a spot where you could do some trailing stops and lock in your profit on the way up.
Yeah.
I typically don't do that with threshold theory, but then everybody's going to be different on how you manage your money. So if you did buy here and this starts to rally up, you can just keep putting your trailing stops up. So if this ends up coming down and breaking the trend line, at least you locked in some profit on the downside. So there is that on how I would approach that too. So yeah, there's always two different things going on. You're playing the market versus playing your money on the side with risk management. So you always got to kind of fuse those together somehow. So I try to explain that in my group sometimes, like, I'm selling gold here. I know I shouldn't be because the system tells you not to, but my books are telling me that it's better to do that.
Yeah.
So
Yeah.
it's sometimes it's hard to explain because you're like, well, that's not threshold theory. That's not the rule. What are you doing? But there's rules and then there's guidelines, right?
Yeah.
And that leads into the guidelines. And sometimes
Gotcha.
you need to be guided into making some money. All right, dollar real quick. Bear zone rallied up, tried to get back into the bull zone, just missed. Just maintaining bearishness. If you were playing it and I didn't, it did wick down here into the where the fib extension target got hit. So you would have bought it there and you would have sold back at the shallow fib. So you would have
Okay.
just traded right there while we're in the bear zone. And then now it rallied up, but it didn't make a bull on the 4 hour. So for me, I'm waiting all the way back down to 103 and change to get long while in bear zone. So I'm not even close to being in the dollar at the moment. And then on
Yeah.
the daily is the one that's still in the bull zone, um, and shallow fib is right at 105.52 with the target of 107.11. Um, so this has just been just waiting it out. I haven't actually played it. I haven't really been trading the dollar as much. I did trade a couple of weeks ago for a quick trade,
Yeah.
but other than that, I've been kind of in the back seat on the dollar, um, just because of time and not that I don't have time. I just chose other things to put in there. We talked about that before
Yeah.
before the call. Um, but that's what I had on those. And then you said to look at Mara, Hood, and
Yeah, I think they're going to
Starbucks.
be interested in Mara, Hood, and
Yeah,
Starbucks. Those are some
yeah,
ones people have been asking about
yeah.
this week. Mara
Let me.
just had their earnings yesterday, blew the hell out of earnings. God, it was just absolutely stupid. Missed on revenue a little bit though.
Yep, and so far my system is telling you bear zone and still hasn't broken into a bull zone yet. Um, Even though we had this higher high right here, um, we didn't break back into a bull zone. Momentum is still relatively low for either one. We're kind of wrapping the directional index lines around.
Yeah.
So to me, we're just still in consolidation, working our way down. This is a daily, so we're working our way down here um, to where my target is all the way down at 1327, which is the 200% that I've been waiting to see on the downside. Or if we get back into a bull zone, which I don't have that indicator
All
on
right.
here to give me what level, but um, I would say the extension right now, based on my fibs right now, is between 22.79 and 23.75. I think it would probably have to get above 23.75 to click it back into a bull zone, but that would be something to kind of consider. But a couple other things I'm seeing is you do have this trend line right here. Whoa. That did kind of break, but came back down and tested and worked its way back up. But it is kind of whenever you break a trend line, different things can happen. One, does it go straight into a bull market because it broke the trend line, or does it go into consolidation? So two things
Yeah.
could happen there. And in this case, it kind of went into a movement to the upside, but it went into consolidation because the momentum's shit. I mean, we're down here with the ADX well below
Yeah.
20. It's at 1191, which is really low, especially when you look back historically. That this whole consolidation, this is definitely an area that you can get chopped in pretty easily trying to buy it and sell it in this little area. At least with my system. There's other
Yeah.
systems that you could try to use while in consolidation, but I've never been one to do that or find one that was consistent enough for me to be confident enough to even do it.
Yeah.
I think it led to a little bit more like day trading. It was just whipping my ass, and I was like, it's just not for me. But it could be for some people, and they might have a good gist on how to manage that. And I'm not it, so don't follow me for any consolidation. I'll tell you that, because I'm not the man to be talking to when it comes to that. But consolidation here, I'd like to see a nice bull zone here. And maybe that happens with Bitcoin also. If Bitcoin gets into the 4 hour and the daily starts getting bull, then this probably goes bull along with it. Um, so, given the fundamentals that you were talking about with the earnings, um, any news that came out with that has not changed my system at all. So I'm
Yeah.
still kind of in the bear zone waiting for downside. So do you want me to go on, or do you have a Mara chart that you want to
No,
look
no,
at?
man. Go ahead, man. Go
Okay.
ahead.
Another one was Robinhood. This was another one. Clicked into the bear zone, and I have a target at 1464 on the downside. If you wanted to, or if you were already long uh, on this move to the upside and you did not take profit, which you should have because it hit the zone for profit,
Yeah.
and then it came back down and you're still long, I would still hold that long because even though we went into the bear zone, we have not had 3 consecutive settles underneath 1690, which is that 38.2% level, or I mark it as the previous shallow fib that has not broken down support yet. So if you are long, you would be holding longs to get stopped out at that point. And most likely, if you bought and traded this, and you were still long up in this area, and then it clicks down and gets 3 settles here, you should be close to break even on whatever position you were in going to the upside. And then if it ends up breaking down to the downside, then maybe you get out with a small loss or break even, but you should have gains from before, so it should be working out pretty good. But if this ends up breaking and it gets 3 settles underneath, then that's where the 1464 target comes into play. I am not long or anything on this, so I'm waiting for that downside target, which would be the lower part of the bear zone.
Yeah.
And again, momentum for this one is not super strong. It is starting to come back up a little bit for the bulls, uh, uh, but given that it's so low, it really doesn't give me a lot of signal. So when this happens, I want to look at the price action and the levels that we're at more than I am some of the indicators. And
Yeah.
in this case, it's just looking for downside. And then Starbucks was another one.
Yeah.
This one's kind of nuts. Um, this one actually on when it went into the bear zone here, and it actually came up and just touched, which was kind of interesting because it actually went bullish right here on the indicator, and we had this move to the upside right here. Um, but this move to the upside right here did not make a new high, and it kept the bear zone, which is kind of cool. That's what I like to see. So to me, when that kind of happens, that's giving me validation that the historical levels are working really well.
Yeah.
So if you're waiting, uh, you got down to this level right here, so you could have bought there, and then came back up. If you did that, you bought and sold at the shallow fib if you played it right, and then you would have been out waiting for more downside, and then it just got the shit kicked out of it, and then went down to the downside.
Yeah. Big double
So
miss there on earnings and
yeah,
revenue.
yeah, and then the next target was 73.44
I
that
see that.
actually hit. So you would be actually long this at the moment, which is actually a good spot to be long. At just say 74, kind of rounded. So say you're long at 74, the movement out of the bear zone and back up into the bull into the and back up into the bear zone. So getting way oversold here and working its way back up. It did kind of dip down here a little bit,
Yeah.
but this one really moved it down and worked its way back up. So given that this is happening and it's actually happening on the support level or the target level, that to me a good risk. That's a good risk reward there. At least take the long. If it ends up breaking down and you get lost on that one, then the next target's going to be all the way down right around 60 or so, which comes from, you know, the next extension. So you have to look at, we hit the 200%. You got to go back in history. This was an area to look at on my threshold. So it's kind of hard to explain, but this is where the next level comes in to where I want to look at the next extensions, and
Yeah.
that becomes in between 56, 62, and 62. And that's where that 60, basically 60 to 61 comes into play as a target. And then that comes in way back here at this point, or basically this whole level in here is where I would want to buy if it ended up breaking down much further. But right now, long, and then in this case, let me put the shallow fib where it should be. If you want to trade this while you could actually be selling it back out at the shallow fib. I mean, there is a huge gap. You might want to wait for that. But if you did buy here in my threshold theory, you buy here, you sell the shallow fib, and maintain that bearish structure. But then again, if you sell out here and it keeps going, then you would rebuy it on a bull zone to the upside. So that's where we're at on Starbucks after getting.
No, I agree. I think it's a great.
Coffee.
I think it's a great risk reward trade here.
Yep.
My thoughts generally with that, again, the trend was already established, as we can see. So the double miss it's just a knee jerk reaction to a news event. It just continued the trend. The trend's already established, guys.
Yep.
And so for me, the way I would usually play, especially with that gap coming down at the end of this decline, is that, I would be looking for a push and close in that gap with the target to close the gap, to end up all the way up there, around that $87.50 area. So that's usually how I will play it, just in general. If we've got a downtrend established, news event comes, gap down, then usually, as long as, in this case, we've got that little bit of sideways happening down there. It looks like, it was such a big drop down into oversold on RSI and Stochastic RSI. So for me, that's a good potential reason to go long there.
Yep.
It could go a little bit lower. It could go a little bit lower on the daily. It's right. The low hit the S4 pivot. I'll go ahead and pull up mine real quick here. Right here.
See where your levels
are on the daily here. What was that?
See where your levels are. So that S4 that S4 pivot's pretty close to my 200% on my threshold. That's pretty interesting. I like it.
Yeah, and usually when you're getting the drop down through, the S4 S5 pivot is the end of the decline. So again, we've already got this. This is the daily. We had the trend was already established down. We had a high. We had a low. We had a lower high. We had a lower
S5.
low.
What level's down there?
Right there, right around $69.
Okay.
Yeah.
Cool.
So again, for me, this was a great drop down, big drop here in bottom down Stochastic RSI, deep down here and oversold on RSI. Supported the S4 pivot there. This looks like 1, 2, 3, 4, maybe 5 here. If I count it real quick. So, again, pushing up into this, usually I'm going to look for a fill in that gap there. So if we're closing above, 77, 77.10 above that, then I would be, generally speaking, looking for this rally up through 87.5. And if we get that, for me, we might end up getting a pullback before we break out, but ultimately should be looking for it to break out higher with that. But yeah, it's right now it's just 3 waves down. It's a pretty deep pullback, but it is just 3 waves down at the moment. So we'll wait and see how it plays out overall. But again, if looking to take a chance on something which might get you in near a bottom for a big, new rally up here into the hundreds, it would be worth a shot. Otherwise, wait for it to fill in that gap and push a little bit higher, and then it'll give you a little bit more confidence in that to look like you're.
Yeah, but I'm with you. We always look for different setups like this, and this is a good risk reward for sure.
Yeah.
No guarantees,
doesn't mean it'll happen,
but it's definitely a good setup.
Well, and that's something I was teaching a week or two ago with our group coaching students. The idea, so new traders get in there and they want every trade to be correct, right? They always want to be right. They don't want to lose any money, whatever. But the reality of it is you're looking for the setup. And it's no guarantee if the setup is going to, work out like we hope it, like it looks like it will, but you take the trade. When it's the trade to take, you take it.
They're higher probability trades. That's
exactly. You're not jumping in just because there's a chance.
Yep.
And so that's a hard thing for new traders often to become comfortable with, because they have to be comfortable with the idea that there are no guarantees that they may lose money. And again, that becomes the emotion thing. Again, here we are with emotions. We started that, we're ending with that, right? But that's what it is, really. And none of these things that Fibble and I say, guys, we would never say they're easy when it comes to emotions and stuff like that.
No.
They're not easy. If they were, all of y'all wouldn't have any problem with it. All y'all be making billions of dollars a year trading and it wouldn't be an issue, right? The reality of it is, as I always say, trading is simple. It's not easy. It's simple because basically you're moving through areas of liquidity. But it's not easy because you have to fight yourself. You have to fight your emotions. You have to fight, your psychology that's going on there. It's not Wall Street that takes your money from you. It's not crypto whales that steal your money from you guys. It's your inability to deal with your emotions properly that causes you to lose. And that it manifests itself in the ways we've talked about today when you're actually trading. It also manifests itself in ways of, oh, I'm going to do this on my own. I'm going to figure it out on my own. Well, maybe you'll do it. I can't say you won't. But statistically, the odds are significantly against you doing that. Again, 3 to 5% of traders actually remain traders, especially after 3 years. And usually those that are out before the 3 years or within that 3 years, they've lost money the entire time. They continue to put money in. But, we always like, there's free information out there. I can learn how to do this. Well, maybe, but most people can't. Well, I'm special. Well, maybe, but odds are you probably aren't. And this, I talk about this because this was something when I first started that I had to figure out. I tried on my own when I first started. I'm a really smart guy. But it just, I didn't know enough about how to approach trade. It's not just listen. It's not like here's the system, right? I think this is another great thing that Fibbo was talking about today. It's how do you approach the trade? How do you approach the market? Fibbo gave some examples here where he didn't necessarily follow through with this system because he was approaching the market in the way that the market needed to be approached at that time for him. And so, again, one of the things, that we continue to teach is not just how do you do this, but how do you actually approach the market? Because any monkey can learn, how to do whatever it is you're learning to do, but can you apply it effectively, consistently? These are the other things. So, a lot of times I'll say this stuff and, new traders will be very egotistical and very, not very humble and be, oh, no, I don't need to worry about that. I'm fine. I'll do it. But, again, statistically, most are going to be like me and you don't learn it on your own. You lose a lot of money along the way. Even if you do, it takes a lot longer and you lose a lot more money. But we also know that if you're determined and disciplined and focused and consistent with your learning, we know that mentors in anything, not just trading, but in anything, mentors increase your odds of success by something like 70%. It's ridiculous, So you just got to I think if you're serious about trading, you're serious about making money, find somebody that when they speak, that it resonates with you because, the people that are with us always tell me, oh man, I love the way that you explain this. It's so great. It makes sense. But there's always other people out there that it doesn't. And I'm not the person for them. And that's okay. Fibbo may or may not be the person for you. That's okay. But at the end of the day, if you're serious and you want to remain in this business and you want to do this for a living and you want to do this to build up some kind of wealth or whatever, beside you, I think Fibbo would agree with me that even if you don't, even if the way we speak about it doesn't resonate with you, find somebody that it does. Because at the end of the day, we want you to be successful. Whether you join us or not, it doesn't change our effectiveness in the way we're trading. But because you're here, we assume that you may be serious about actually trying to understand. And so while we think we offer great things here and a lot of plus for you, if it doesn't resonate, that's fine. Find somebody that it does, because at the end of the day, the odds are you're not going to do it on your own, and you're going to lose a lot of money in the markets.
Yeah, you did hit a point that I think needs to be repeated, and I'm sure this is something that people don't want to hear, but again, it's not Wall Street. It's not the big whales that are taking your money. It's your own internal demons and your emotion is what's taking your money. And I know that's a really hard concept. And I was the same way early on. You're like, yeah, I could do all this, blah, blah, blah. But over time, it was more reading about psychology and controlling mindset and stuff like that actually helped me become a better trader than reading how to trade. You know what I mean?
Yeah.
It's anybody could read
Yeah.
how to trade or figure out a strategy and those kind of things. It's I don't care what strategy you're doing or what management thing you're doing. If you don't control your internal emotions,
Yeah.
no system's going to work ever. I mean, it's just never going to
100%.
work.
Yep.
But it's a tough thing for newbies out there that are wanting to become traders to hear, because it's not what they want to hear. It's like,
Yeah.
oh, I want to blame it on Wall Street taking my money because they have better people out there trading. Nope, they have better people out there that manage emotion better. is what's happening. I know it's hard to explain, and it took me years to figure it out.
Yeah.
This is not overnight. I would probably say almost 5-6 years of
Yeah.
just grinding and learning more and more on how to take emotion out. And that's what made me lead to my system is finding something that I'm comfortable trading in that leaves all my emotions at the curb. I
Yeah.
just, not all of them, but you manage them, because we're
Yeah.
all human, and there are times that I get all pissed off and I probably do something I probably shouldn't. And, and it happens. But
Yeah.
if you actually take the time and learn how to manage and those kind of things over time, you will see the benefits of you going, oh man, I'm glad I waited for that.
Yeah.
When you start looking back at some things, you're like, okay, I didn't jump on this, and since I waited, look what happened, that kind of thing. And that all comes down to a whole bunch of other things that we could talk at another time. But
For sure.
journaling and all that kind of stuff you could do. I know that sounds really weird, and a lot of people don't like to do that. I personally don't do that anymore as much um, than I did when I started to first kind of learn
Oh, it's imperative when
managing
you
my
first
emotion.
start.
Oh yeah, I didn't for the first few years, and then I
Well, but then you
started
found out
to.
how important it
Yeah,
was.
yeah, exactly. And then I was like, this actually works.
Yeah.
And another thing that actually led me into finding a lot of different patterns that I found measuring some of the psychology was because of my journaling.
Yep.
Because the things that I was missing, I was seeing in the charts that I was like, oh wow, I could see what's going on here. And then I would say, okay, let's look at this historically, and then you start to see patterns, and you're like, okay, this is actually kind
Yeah.
of cool. And then all the rabbit hole comes down, and then you're finding patterns you never seen before, and then that's where the excitement for me comes in, and that's why I still do this after so long, is because I just really enjoy it. It's something that it's a phenomenon that's out there that's really hard to explain, but it works, and it's just there, and you just got to take the time to learn it. But
Yeah.
I'm babbling, but good stuff.
Hey man, I appreciate it. Hey guys, listen, we're Fibbo, myself, and Gary Cardone. We're gonna work on getting something together. We're putting together a risk management segment for you guys, and so we're gonna do that, and not just risk management trading, but risk management in life, and really kind of talk about it because it's applicable all across every level of your life. So be watching for that. I'll be posting it as soon as I get more information on that. I think I think we're going to get to the point where I'm going to do these. I've been having these guests on here every Friday. I think I'm going to move it to its own time a couple of times a week, half hour. And so it's about my bandwidth right now of what I've got time for. But yeah, 2 or 3 times a week for about a half hour. So you guys are going to see a lot more guests coming on. Fridays, I think we'll leave here for this market breakdown, and we'll do that. But on those things, I think I need to get Fibbo on there and just talk about trading and life and whatnot in general. What do you guys think about that? Let me know. Leave a comment or something. Hey guys, hit the like button, subscribe, follow me wherever you're at. Follow Fibbo if you're not already on Twitter, on X. He's got it right there. It says @FibboSwanee, just like that. So go ahead and follow Brian there, and you'll get a lot of stuff of what's going on with him, of course. If you're not an Orioles fan or disc golf fan, you can hold your nose while you read those posts. There's a lot of other good posts out there, though. But you got to
Yeah,
have guys. Listen, you
I do
got to
kind of
have
mix that in a little bit. Sorry.
hobbies and interests outside of trading, guys.
Yeah, and
Again,
that's a good point
yeah,
too. I mean, that's something we could talk about when we talk about risk management in life.
yeah, yeah. So, but there it is. Fibbo, as always, man. Really appreciate you being here. Glad we were
Yeah, you
finally
bet.
get you back on.
Yeah. Sorry, the last couple Fridays were just kind of a mess. So I'm back in the rotation.
Yeah,
I thought you were getting rid of me. All these guests coming on. I'm like, oh, he's got rid of me now. Forget it. No, I'm
no,
just
no,
teasing.
of course not.
I'm
But
just teasing. No, I
with
actually
the
like the guests. I mean, there was a couple guys you brought on that I've never followed before. And I like Tim. His I can't remember his
Tillman,
name. I think that's what it was.
yeah, Tillman and
Or
Andrew.
Tim's TA or something like that.
I haven't brought him
Um,
on yet. I'm going to.
oh, you haven't had him on?
No, no, no.
Something led me to his page, and I started looking at stuff, and I liked I liked what I was seeing. So
Yeah, yeah.
I think that's who it was. I can't remember. You had a couple guests on that I haven't followed before that I am now following. So that's kind of cool.
Well, I've got a lot of connections and getting more every day. So we're gonna have some great
Cool.
people on here, guys. So yeah, like I said, definitely subscribe. Hit that little bell or whatever so you can be notified when we have YouTube videos out. But working on producing more content for you guys, not just live stuff, but also short video recordings and whatnot about different things having to do with trading and other things that maybe you'll find interesting. So there we go. We need to get out of here, but as always, we appreciate you guys showing up. Thank you so much for hanging out with us. Fibbo will probably be back in about 2 weeks. That's usually what we try and do every other week. So I'll let you know for sure once we can nail that down.
Yep.
But other than that, remember, the only thing you control is how much you lose. So with whatever else you're learning out there, keep working on your risk management. It is the one thing you can do. It is the closest to a guarantee that you have in trading because that's the only thing you control is how much you lose, right? And even then, it's kind of iffy if you get a big kind of drop, a big kind of push down and you're really in some illiquid kind of shitcoin or something. But, it is the only thing you have a chance of controlling in trading, all right? So that'll be it. Man, oh man, Fibbo, again, thank you so much, man.
Yep.
And all y'all have a great weekend. And gosh, I guess I'll see you next week, unless you join us over there at the TWC Trading Academy. All right.
Yep.
Take care, everybody.
All right. Later.